Scott Shellady back with us. Interesting to me, the economic data has been mixed but leaning okay. Housing's holding up. Jobs picture looks good. Earnings, the last second quarter earnings season that we're just coming out of was also decent. Do you think that investors will rotate back to the fundamentals, regardless of the Fed, regardless of China and geopolitics? Will that help out things here in the trading days to come?
Not in the short term here. We're still going to be a little bit too emotive next week, the first couple, 3 days.
Okay.
Yeah, but I'll tell you, I think that one of the things that really alarmed me about 2 weeks ago was that I read a piece where it was written that while this unemployment rate's been coming down slowly and we're all applauding that and that looks great, at the same time that non-participation rate has been rising and setting all-time new highs. So the argument was made that if we're seeing the unemployment rate come down, which is good, every other time we've seen the unemployment rate come down like it's coming down now, we've been pulling people out of homes and putting them back to work hand over fist. But that's not the case this time. We've got more and more people giving up, sitting at home, and giving up hope. So that was a big alarming thing for me. So I don't think the economy is as good as people want to tell you it is. And after all we've done, throwing the kitchen sink at QE3 at everything and expanding the balance sheet by $4.5 trillion, the only thing we can do is 2% growth. I mean, that's not my America. It was 3.5 without any quantitative easing before. So we've got a lot of work to do. And I don't think we can. It's going to be difficult to see China slow down and see how well we can buffer that, because I think that's going to be a bigger deal than people think.
Paul, that's a great point you made,
Scott's
right?
dead on. All year long, all these data reports come out, and we keep saying to ourselves, well, it's okay. It shows enough growth. Everything's been this qualifier soft word that it's just good enough.
Right.
No, none of it's been
and we
good
have no
enough.
Inflation. The CPI was like 1.1% or something.
Think about the growth that we're getting now, the wage growth we're getting now, with the Fed at zero. What if the Fed was at neutral? What if the Fed had rates at 2 or 3%? You would see it even worse off. So I think we've been kidding ourselves that our economy is doing so much better than everybody else.
Maybe a rate hike would be beneficial to stoke inflation a little bit, because with that we'd get wage growth, right? Am I onto something, or are you kind of rolling your eyes?
No, I think
it's the opposite.
Yeah, and I'm not certainly rolling my eyes at what you're saying, but I think the only way you could argue that a rate hike would actually be good right now is that it would
spur loans.
Well, it would spur.
Well, the banks would love it because
it would drive out speculation. It would drive speculation out of the markets and maybe drive a little.
Brian, is
drive
Ellie
better
up there,
investment
or
decisions
Alex?
in the market. You care about your money a little more when it actually costs you something, and you think about where it's going. We've had a lot of free money and a lot of bad investments because people they didn't have to care about the money because it was coming too easy.
I mean, I think the Fed really put itself in a box here. I mean, I think not raising earlier and kind of boxing itself in that it has to raise now, while the Chinese economy is, I mean, who knows what's going on in China? Do we really know whether it's 7%, 5%, 3%? I mean, we don't really, it's probably not 3%, but we really don't think, maybe.
We don't know.
They don't have
that's the whole problem.
They don't have an accounting system, so how do we really know? So
Steve Sjuggerud still with us.
In a very difficult
Steve's
position.
a big fan of the gold miners these days. What else are you looking at? What else are you looking to position here in light of this sell-off?
Well, you've been talking a lot about the Fed and interest rates, and I think one thing that people fail to realize is that stocks actually perform well when the Fed is raising rates. If you look back over the last 25 years, every time the Fed has been in a rate rising cycle, stocks have actually gone up. Real estate has actually done just fine, and so has gold. So I think that we're putting a lot of emphasis on this Fed hike. And I don't think it should be that significant. Looking at the stock market, there are reasons for optimism both in the short run and in the long run. In the short run, I feel like this has been overdone. Sentiment is an extreme low right now. In the longer run, we have record low interest rates right now, and I believe that's going to continue even with the Fed hike. So mom and pop America are going to have to do something with their money. I think stocks and real estate are going to be two primary places where they'll put that money.
Okay, Andrew, to you now. It looks like this selling is accelerating once again. We were down 500, then we recouped about 75 points on the industrials, and now we're coming back down. Looks like flirting with the 500-point deficit once again with 4 minutes to the close right now.
Yep. Yeah, I can understand it again with the thin afternoon, but I would also say, back to your question from earlier about who's affected with China and what's going on, and then this discussion on Apple. You know, there are also people with commodity exposure. So coming back to the U.S., you know, whether it's oil, whether it's copper, whether it's some of those other metals and industrial complexes, those are obviously affected from emerging markets demand, and we've seen those lower commodity prices. And then some industrial companies that sell to those,
Right.
The
We
beers
saw
and
oil
cats.
today hit, let's remind everybody again, oil hit a $39 a barrel.
Yeah.
Okay, there we go. We're 505 points down now. Charlie, you called a 500-point decline day today. We've got it. We're at session lows
wish I
and
were
building
wrong.
upon them.